And officially, good morning. And welcome to the Market Watch Group midweek check-in. Okay, I had one person say can't hear you. Now, obviously, I can't ask them if they can hear me now, but I just want to check in to make sure that sound is on. And okay, perfect. That sometimes lets that other person know that they may need to pop out, pop in, or something to check on their sound. Okay, here's the disclaimers. As always, we're not brokers, we're not advisors, no recommendations, no advice. This is strictly for education, illustrative purposes. Today's agenda, press. My friend, good to see you. Today's opening analysis. That's the most important part, right? Market's a little shook. By what? We'll go take a look. We'll talk about it. We'll get a sense for it. What does it mean? We'll revisit our posture. With this in mind, what's our mindset for open trades? Well, here's the deal. At this point, I would say you had significantly pared down or closed most of your trades and didn't have a lot on. Don't have a lot on. Is that right? If you have a lot of trades on and you're like, I'm about to get punched in the mouth, yeah, you might not be talking to me, actually. So, but there's nothing going on that doesn't fit in the narrative we've been building and talking about. That's important for us to understand. However, if you do still have trades on, yeah, you've got work to do. First things first. I don't want to ever stop out on the open. Yeah? So if you have a stop loss, if you have a conditional order on an option where you said if stock XYZ drops below 57.55, I'm on out. And you go look at your futures, because what's one of the things we do in our pre-market routine? Well, we obviously go look at every trade that we're in and evaluate how it looks on the pre-market. So you would already know. So remember that routines is one of the sections in our trading plan that we're working on this week. So pre-market routines. Check what, and this is something I said last night, and I'll always remind people. Top priority within day-to-day management is always where you have skin in the game. You start there. You don't start with, hey, are there opportunities for me? Go make sure what you have already on is managed, and then we talk about opportunities. So that's our first priority here in today's opening analysis, right? The futures are down. They're indicating we're going to have a nasty open. So any trade you have that is outside of, well, oil, funny enough, we put an off-cycle oil trade on for just such occasions. So those who took, David, did you end up getting on? And second of all, did you end up getting more contracts on that paper trade, or did you just leave it as is? So we'll talk about that trade. We have another trade on that you may or may not have done in a calendar spread. And the calendar spread was okay. That calendar spread is going to benefit from today. It'll be magnificent for that calendar spread. This is exactly what the calendar spread is built to capitalize on. Is this so unexpected? Well, one of our concerns in the market has been that, and it wasn't like a huge concern, but just that the VIX was just like, it's not turning. It's not turning. The VIX is going to continue to concern, and I will draw some lines and I'll tell you why. But I think that the VIX is going to be breaking a consolidation. So some of you might have hedges on that you put on a little bit ago, not because they were needed. It wasn't an automatic hedge trigger, but you might have hedged because they were cheap and you had a good number of bullish trades on. So if you are one of those, if you hedged the hedge is going to be paying off as well, because right now, two things are going to happen. Market's looking down 1%. When we go look at that VIX, you're going to see how that fear is already starting to get priced in. And it's just, right? You can almost feel how it builds. Anyways, we'll get to that. Review there's an instance of shopping list. Review the opportunity list. Nothing's going to happen today. No opportunities are going to start to pop on a day when we're like, hey, what's the damage? That's what we're expecting for today, is to be processing what's the damage. So unlikely to have setups, trading plan progress section of the week. Remember that we are working on routines, section 5. If you're new, and I see a lot of new names and faces. Great to see everybody. If you're new, say hello. If you haven't yet, go to the channel's resources and links and start grabbing some associated documents and resources, including your own market posture log. You can get a copy of the trading plan that we work off of, which may be a little different than what you have, or completely different if you don't have one at all. All right, let's dive in. Before we started the recording, I was looking at Walmart because I was like, wow, last night I added a new channel for the trading, for trade alerts. And I was going to put this on. Actually, what's interesting, if you notice, Walmart actually set to open a little higher. Let me show you what I'm looking at so you can see it. But this is my closing price. This BA, that's bid ask. That's the bid ask from the pre-market. Remember that the pre-market starts 8 a.m. Eastern. So there's an hour and a half of pre-market, and then 4 p.m. to 8 p.m. There's post-market extended hours. So there's trading going on. It's order matching, but there's trading going on. And so here you can see I'm slightly up on that trade. One of the trades we had on that you may still have on is Colgate, CL. If I put in CL, you'll notice 97.40. Well, this one's at 97.60. This one's up a little. Why? Well, because remember that we said these are defensive to some extent. If I put in SPY, 564, where are we set to open? 558. Okay, that's down here. Okay, so we're set to gap down. And here's the deal. Look where we were. We were riding right here, just below. Did I just change how thick that was? It's like I did that on the fly. Maybe not. I did. Amazing. Along the upper range of our trend line. So remember, one of the things we've said is this could come all the way back to here, and our trend score is not going to change. That's built in. So does that mean it could drop to here and then go sideways and then down a little and then sideways and then start to go, and guess where we are? Yeah, we're right by the bottom of our trend line. Looks something like this, where it gaps. Now it's going to gap further than this, and then sideways for a while and turns. That was a consolidation. What's happening right now? Market's consolidating. It's starting. Now, what's my first expectation? 3%? A dip, and we're ready to go. If it starts to do more than that, then you have this over here. This is a bigger consolidation. This was about 5%. That's what a 5% drop looks like right there. Now, if I go back even further, that is 10%. That's a correction. Just so you have a sense of how, we're not like, oh, the market's just going to all of a sudden drop out in a day. That doesn't happen, right? So it happens like this, right? And so here we have, this is just a little consolidation, 2-3%. That's a bigger consolidation, like 5%. But when we say the market corrected, that's a technical term. 10% from its high to its low. That's what we had right there. It doesn't do it in one move. It took 2 or 3 moves, right? And you can go back in time and historically look at what our market posture looked like in this period. We don't panic, but we definitely tighten up. So anyways, as you think about what are we now, let me put that line in again. That's our gap. You see my little pink dot up there? That's the gap. So put it in context so that we don't be like, oh my God, what's happening? Everything's okay. It's fine. But we just want to be aware. How are we going to handle this? What are we going to do? If you have any trades that you're like, I don't know what I'm going to do with this trade, give us an example. We'd love to take a live example and walk through it. But what I want to say is, all this is for me is taking us one step closer to a number of good-looking trades. The market always rattles a little bit. I think it was some Chinese news. They are not coming out of the inflation like we are. China curb fear. Yeah. So there you go. The market is opened. Let's go see. Is my Yahoo off? The Russell is not up 3.5%, is it? Okay, yeah. Something's going on with the Yahoo, so be careful there. The Russell is down 1% on the open. The S&P is down 1%. Let's go look at it from the SPY perspective so we can see that red marking where we had there. We're down 1%. Okay. That's not that big of a deal. I'm actually thinking the Walmart trade may still go out today, to be honest with you. But what is happening? So the SPY trade, you can see, is popping today. Popping. Why? Let me go show you real quickly. Because we are smashing back down into this profit range. We were out here, and I was getting ready to add a second trade to this to extend it. But I want to give it time, right? I want to give it time before I... Glenn, it's good to see you. I didn't even notice you were in there. Glenn's here, everyone. You should be asking questions more because if I miss it, Glenn's going to catch it. But like I said, when you're not asking questions, I know what it means. And you are mesmerized by this opening analysis. Yeah, this is a good spot right here. This thing, honestly, we'll see what happens if we just kind of sit back and get another day or two out of it. I'll probably try to carry it through the weekend. There's one day, that's Thursday, then Friday. If we get to Friday and I'm at or below where we are now, I'm going to carry it through the weekend. 1, 2, 3, because look what happens over the weekend, and then we're done. And then we take our profit, and you'll notice if you took this trade, what have you done with it? Nothing. Sat and looked at it a little here or there. It's not an active rate. It's not a high activity trade. That's not what it's for. Complementary. Calendar spreads as a neutral time spread strategy in a low volatility market, phenomenal to add in conjunction with directional trading, because a lot of times in that same market, directionally, you're buying options, which means you're theta negative, right? Time's working against you. It's hard to get time working for you in a low volatility market. Ask Steven how covered calls look right now and lately during this low vol environment. It's hard to get premiums where you feel like it's worth putting your stock at risk. So it is what it is, though. That's the environment we have to trade. Be water, adjust, and that's what we have. So, all right. So yeah, those trades that we put on and said are off cycle or a time neutral or a hedge. Those are the trades that sometimes you're like, oh, it's not doing anything until this. How do I read this chart, Michael? That's a phenomenal question. Two things that we're looking at here. Two dates. Number one, number two. So you'll notice the first date is today. You might not be able to see it. That's 7/17. That represents this curved line. That's one of these lines, okay? And then the second one is 7/27. That represents this curved but also peaked line, okay? The pink line is today. The blue line is at expiration. So as I click this date box down here, you'll notice that in the middle, time is going up. Time is benefiting us. On the outside, it's an opposite impact and it's going down. So as I start to advance this, click, 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 one day at a time. If we're between 547 and 564, time helps us. Great. Let's stay in there. But if we get to the outer edges, it doesn't. So this chart helps us understand what if. Now, you'll notice that this chart peaks in the middle, drops on the sides. What does that mean? It means we want it to stay here. That's a time neutral trade, a delta neutral trade. This trade doesn't benefit from time or from price going up or down unless it actually was wrong. We were wrong for a little while, and now price has moved back into the original range that we were expecting. So this that's how we know. Because if I compare this to, let's say, CL, this is a directional trade. That's a much different chart. We can see that this thing goes up. It doesn't peak here in the middle. And up means, look down here at the bottom, that's my stock price. As we go from 104 to 105 to 106 to 108, 10, etc., what's happening? We're making more money. This is a directional chart. So this tells me if the stock's at 104, I will make $1,000. If the stock gets to 107, I'll make $2,200, etc., etc. So this is a chart of a pricing model that allows me to do what if. What if the stock goes up? What if it goes down? What if it takes a week? What if it takes 2 weeks? And then I can see how would that impact my options. Phenomenal stuff. Real important for options traders to get comfortable playing with this type of a pricing model. So, yeah, all right. Those are some of the trades on. Let's go see what's going on now in the opening range. Now, one of the things I told you was take your stop off if you have one on. Don't get stopped out on the open. That should be a rule, I think. Because if you get stopped out, you're not only stopping out, but you are presenting the market makers a opening bell market order. You're basically like, hey, market makers, give me whatever you think is appropriate. Oh, and I definitely don't think you want to put your fate at the mercy of a market maker, asking them to give you what they think is appropriate. Yeah, whatever works for you, buddy. We can't do it. They will utterly destroy you. If you cancel your stop, wait 20 minutes, and the stock is lower than it was when it first opened, you will still get a better price than if you got out on the open. You can't do it. In fact, I remember the last time it happened, I got in, I thought I closed on my orders, and I started doing a presentation, and all of a sudden the market opened, and I heard that noise. Bring, right? Bring. And I'm like, oh no. No, 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 no. And I went and I looked, and one of the orders I didn't cancel, and it stopped out, and it was such an outrageously bad price. I couldn't even believe it. And within 15 minutes, exactly what we're seeing now. What happened? So let's just say this was my stock. I had a stop on. Let's say I had that stop below this level. It was around 561. Let's say. I don't know. Maybe something like that. And it gaps down. It's going to open down here. I'm going to take that stop off. And I'm going to wait. I'm going to wait for the first 15 minutes. So I would still wait for another 6 minutes. And then I would come in and I would put my stop here. And I know you're thinking, Scott, I was told you never adjust a stop down. I'll tell you this. You never. Because that's rigid and inflexible. And we be water. You cannot never and be water. Never and always. Got to be some room to be like, wait a second. That's the first thing for me. Now, here's the thing. I've had so many times where when I do this, I don't actually end up closing the trade. Glenn, weigh in on this one if you support what I'm talking about. But there's times where I'm going to put it down here and it's going to sit, and then all of a sudden it's going to come up a little more. And then I'm going to say, all right, I'm going to move it up a little bit more. And by the end of the day, I'm back up. And all of a sudden, what does that look like on a candle? It gives us a recovery. And I'm like, hey, I'm back in this thing. What else might cause us to try to see if that's going to happen? What is our current market posture? I'm a 5.75. I'm bullish, and I've been bullish. So if I'm bullish, and I've been bullish, I want to keep being bullish. So in a situation like this, I'm going to wait. Is that due to automated trading setup before the opening bell or people's orders? So what's happening is, great question, Kevin. It becomes a market order. So when the market makers get there, they get to see every market order. They're like, okay, look at this. We've got 1,000 orders for buyers here at this level, and we've got 28,000 sell orders, which is kind of the imbalance you would have expected for today, right? And they basically take all the market orders and they gap it down, and they start filling orders, and then it starts to adjust at that point. Now, options market makers, they have the same luxury, but there's not the same price influences that keep it at that, 559 level. That's 560. Option market makers like, hey, this thing just triggered, and the guy's like, sell me at market. There is no market price until they set the market price. So that initial market price will have like this 80-cent wide spread. The bid will be ridiculously low, and within 10 minutes the market is literally recovered, and it's like $80 extra a contract, and this is like, what just happened? Right? I've been violated. So all it is due to the inefficiencies of giving market makers license to execute at market on the open. Stock, less dangerous. Options, critically dangerous. Like, it just, I refuse to do it. I will not ever, no matter what. I will pull the stop off, wait, and then I'll work my way out on a market order or on a limit order. If it's worse. So if I had done that here, and this thing, instead of recovering, went from here and it just started going down, even if I get out at this lower price 15 minutes in, I get a better price there than I would have got there. Every time. I've never seen an instance where it wasn't better. Could you find one? Of course. But that's a one-off. I'm basing my rules on the norms. So, okay, let's go through our watch list. So, real quickly, let's look at the VIX, because I don't see any issues here. But if you go watch, even the VIX, we're right at the old high. So here's the thing. that's my consolidation line, and we definitely have broken that. I mean, this is back when we were talking about a hedge, when you could get cheap puts back here. If you got them and you held on to them, they're probably okay. Maybe making a little bit. Little time value has taken away, but it's in an okay place. Yeah. What does this mean? It means my VIX score is not gonna increase. But if we turn, that's still a viable situation for me to think we're gonna come back down. And then from there, I would want a lower high, and that would be quite bullish for us going into the fall. All right. Let's hit the watch list now. So, CL, that's one of our bulls that you might still be in, and you can see it's doing just fine. We have an oil. We put the oil trade on here. We said we think it's looking to bounce, and yeah, it just broke the 50 and made a higher high. So are we going to see if this thing continues? Of course. That was the point of the trade, right? It was off cycle. It was to catch. It was a reminder of what happened last time, right? At around this very same level. So yeah, anyways. Okay. So I would expect, things look okay. Let's look at our watch list and see. We have about 10 stocks on the opportunity list. I'll make it 11. I'm adding Apple to the list. Yesterday, it was a little overextended. Today, on this consolidation, yeah, this thing moving on back to 220. Moving averages coming up. Nice little intersection at this old high. That looks beautiful. I would love to trade that. AMD was on the list. That's a little nasty. 6%. I'm not gonna lie. 6% has me like, ooh, but it is still on top of the moving average. Maybe. Amazon on the list, still on top of the moving average. If this is where it starts to stabilize, gives us a couple sideways candles, and then all of a sudden the buyers come in, this thing right here turns, boom, that's our trade. I'll look for some profit here and then see if it can get up here to a new high. Absolutely, right? That's what I'm looking for. AVGO, you'll notice we had a fib discussion yesterday. Well, it's not this fib, is it? So what's the next one we think? Well, maybe it'll be this one. But the problem with this one is that is a full retracement. So do you still like it if it, first of all, failed to meet the previous high on this move? And then if it gives it all the way, whoops, not that much. But if it gives it all the way back to this point, do you like it? I don't know. At that point, I think I'd probably be paying more attention to NVIDIA, TSM, Micron. If it's, I don't, at this point, I'm already liking AVGO less with that gap. But they're all dropping pretty hard, these chips, right? That's happening. AXP, what did we say? We said our financials are not going to be tradable until we see consolidation start to come. That's what we're starting to see. So now I would expect the financials to start giving us consolidations. I never loved Boeing. I just like to watch it. BAC maybe starting its consolidation. BLDR. So if you missed yesterday, you might be like, where's this stock coming from, Scott? If you missed yesterday, we did some searching. And we said, hey, let's search through industrials. Let's search through consumer discretionary. This was an old friend where I said that breakout was pretty substantial. Broke this. Now look, you might say, look at this breakout, Scott. Remember what has to happen. It has to go up, down, up, higher, low. That's the pattern. That doesn't happen. We don't trade. Did it happen? No, we don't trade. Now it's in another consolidation again. Consolidation. Boom. With volume. Yeah. What has to happen? Pull back. Higher low. Trade. Absolutely. That's, people are like, oh, that trend was terrible. That trend has now been smashed. I'm not worried about that trend. As long as the buyers, after their smash and grab, hold on. Now they're taking a break. We'll give it the selling cycle. We'll see what the sellers do. If the sellers don't do much, that's all I ever need to see. At the end of the day, always boil your thought process down to supply and demand. What did we see here? The buyers just yanked the rope. The sellers are barely holding on. Now, the buyers are going to get tired, and when they do, sellers are going to pull back a little bit. Now, if the sellers pull them all the way back to the starting point, then we're like, yeah, we're right back where we started. That's AVGO. But if the sellers only pull this thing back to 150, 148, you're like, oh, those sellers, right? Think of, like, I do want to think of it like a tug of war. So if you were watching a tug of war in a gym and you saw that, you'd be like, oh, this thing's over. This thing's over. The sellers team, they're going to pull it. They have hardly anything. As soon as they pull and they're done, the buyers are going to yank them across the line. That's what we're trading. That's our story. Yeah? Supply and demand. We can see it. We can feel it. So BLDR on the list. Citigroup needs to pull back. Caterpillar needs to pull back. But I want you to notice what's going on. Look at these breakouts in industrial. We said we need another sector for our sector score to improve. We need more breadth in the market. So if you ever hear people say a narrow market versus a broad market, it's how pervasive is it? Well, if we have 2 sectors, it's narrow. 3, getting better. 5, yes. So what are we looking for? Financials, industrials, and consumer discretionary. Well, look at all these breakouts that are going on. BAC already doesn't need to break out. Already has trend. But breaking out, already trending. Breaking out, already trending. Oh, Carnival Cruise. Look at Carnival. I just threw some new ones on there. We needed some new blood on the watch list. CL, we're in it. It's looking fine. CMG is in a consolidation. What does that mean? It can't be traded until it does what? That's it. Once it goes through that, then we have this kind of an expectation again of, I definitely want to see that. If I show you this on a shorter term chart, I'm gonna have to hurry. It looks fine. It's still well above, right? That looks like it's a nice uptrending stock still. That's what the institutions typically would see if they look at it. There's oil doing well. There's Costco. Looks like a setup. It's holding on. If this market stabilizes, this one, Walmart, things like that look good. CSX broke out, waiting for a pullback. Carvana, strong, waiting for a pullback. Yeah, you missed some things. We added like 12 new stocks. The Dow, strong. Ford has broken out, looks strong, just waiting for a pullback. Fastenal broke out, just waiting for a pullback. So I want a pullback. In fact, I'm like, yay, this pullback isn't really pulling some of these stocks back the way I would like. So does today's move scare us at all? No. It shouldn't. Today's move should be like, hey, this is moving us closer to our next round of opportunity of getting trades on. We're bullish. We're going to stay bullish. There's nothing here that's going to shake us right now. FCX, there's a little bit of momentum still, I think, in oil, or not oil, excuse me, well, yes, oil, but materials from more of a mining perspective, gold, copper. Apparently, Trump supports Bitcoin now, and I didn't think he did. Personally, I don't know. Sometimes it's hard to know the policies, but that coupled with his positive surge, that's the impact. Bitcoin is regained. Now, well off its highs. So we'll see what kind of enthusiasm it gets. Geo. This is a REIT. I wasn't even sure what this was. It showed up and I'm like, look at the surge on that thing. Anyway, I just thought, why not? You guys know I'll put stocks on the list and then within like a week. Right now, I'm just putting it on, trying it on, see how it fits. It may go back to the rack, right? None of these new ones have earned a place at the table necessarily yet. Keep that in mind. General Motors looks great. Earnings coming up. Google, that's a fabulous looking setup. The only problem is we're getting close to earnings. So without earnings, I would be licking my chops with this right now. Home Depot broke out, higher high. What are you waiting for? Higher low. HWM. Okay, so this was one that we put on. Gave a nice turn yesterday. A little bit of a pause. A little harami today. It's not right, but it's not wrong. Here's what I would tell you. Easy for a stop. Even today, I would still probably, if I had a stop under this, I'd still probably move it up and just be like, hey, if this thing's going to fall apart, I'm going to keep putting my stop a little closer to protect against when and if it does. I got a hard stop at the top of the hour, so let me make sure I get through the top of this list. Breaking out, I mean, small caps look so strong. I'm not sure how they recovered like that already. KBH strong. Our watch list is full of strength. Just strength everywhere you look. So any concern you have, I hope, is pushed aside by this. Wow, Meta. Looks like Google's the horse. I don't know what's going on with Meta. This is now beyond tradable. It's now in a consolidation. It cannot be traded at this point until it goes through the process, right? It must be cleansed. MFC looks fantastic. Coming in, getting ready to trade setup. I love it. No, Morgan needs to pull back. Microsoft, yeah. It held the 50. If it holds, I'm going to give it a chance. If it holds, I'll give it a chance. Micron. Micron fell apart. We actually did a trade on Micron. And if you did it, you would have lost, but you should have lost small. Plenty of opportunity. It's like we got in and it tried, and then it tried, and then right here, if you stayed, you're out. But if you could have gotten out anywhere along the way out of impatience, very near break even or just a small loss. So you can always live with that. Netflix, wait for earnings. Nvidia, still viable. Although, look where we are, just kind of teetering around this old trend line. We'll see. Palantir looks fine still. Q still look bullish. SPY still looks bullish. Another new one here, TJX. Looks bullish, but waiting for a pullback. TSM. That actually looks better. That looks in line with the trend. If that stabilizes, I would trade it. Here's the dollar continuing to ebb, which is what we were looking for. Here's the VIX. Still to some extent flowing, but you can see it's pulling back, right? It's pulling back off those highs. Walmart, viable still. There may be a bull call spread trade coming out on that via alert. So if you're willing to trade bull call spreads, that may be coming your way. That's it. I'm leaving just a minute or two for questions. SPY trying to hold. There you go. XLE Energy. Yep. Thank you, Glenn, for posting. Yeah, the industrials. Honestly, press, right? Like I think on the next pullback we'll have a much broader range of candidates. We should have some industrial trades on the pullback. We should have some discretionary on the pullback. We should have some financials. And remember that there's always times where if technology and communication services goes into somewhat of a lull, It's those other three that have to carry, and that's why we need them in place. That's why we need that breadth to sustain our bullishness. So, what's the bottom line? I see no problems here. This did nothing, but this was a minor hiccup. Do you think there was panic this morning? Yes. That's just what people do. We just need to make sure we have the ability to talk ourselves through it, make sure we have a plan, make sure we stick to the plan. A lot overextended. Can't trade them right now, right, Press? I mean, we've been waiting for that. Unfortunately, it's not really tradable, right? It's just how do I not show overnight futures on the SPY? Okay. If I come in here and I go to equities, here I have show extended hours trading sessions, or I can start aggregations at market open. So I want to come into settings. A couple things you can look at here. You can change your expanded time. I keep it at 20 typically. You can make sure that corporate actions show, that's earnings and stuff. You can show or not show extended hours. You can change how your candles work, actually. So you can set all the different candlestick features as well. So, all right, I got to run, though. It's great to see everybody. Glenn will be back this afternoon for the closing hour in Market Watch meetups to chat with you. Make sure you join with him then. Keep an eye out for alerts because I actually think they're going to be coming. There's nothing dissuading them. I hope you guys have a great rest of your day. As always, happy trading.